Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, November the 12th, 2010, and like we do every night, it's time to look at the market, so check it out. Okay, let's start off looking at the Dow Jones Industrial Average. This particular index was closed down 90 points for the day, and you can see that we have had all week long substantial selling going on. The main thing I want to point out here about this particular index is this smart money selling. Whenever you've got lots of guys with lots of money dumping their money into the market, you can see which direction they are betting, and whenever that large amount of money gets put into the market, it makes markets move. It's just how it works. It's a weighing machine, so to speak. More sellers than there are buyers, and you end up with a move to the downside. More buyers than there are sellers, you end up with a big move to the upside. A substantial move, by the way. And in this case here, we have substantial selling. A total bias on the sell side here. Absolutely important to note. Whenever you get to the tops of moves, like you're seeing up here, all right, and you start seeing that big selling going on, that makes sense. That's the top of a move. You'd expect them to say, hey, wait a minute, it's overvalued. We're going to start shorting it. We're going to start selling it, whatever. At the end of the day, that makes sense. When you see activity down here at the beginning of an advance to the upside, you want to see the same thing. If they were bullish, you would see them buying a bunch of stock ahead of a big move they see coming in the future. That didn't happen, okay? Low volume rallies fail, as we've stated before and as we've seen before. So whenever you've got the condition you have here, this makes perfect sense. There should be no question in anybody's mind from a technical perspective of what's going on in the market. It's overextended across the board, across the pond, you name it, it's out there, it's overextended, and it's coming down. That makes perfect sense, okay? Now the question on a lot of people's minds right now, and the question probably every investor's wanting to know for next week is this a start of a major sell-off, or is this a pullback before bulls take it much, much higher and all the bears get laughed at? Well, I think the answer to that question is both. You're going to see a move to the upside by bulls, that no market falls straight down. So I would expect to see a bounce here and there. My most important note that I think you should take from this video are all the gaps. We've talked about these before. When you've got a run like this with all kinds of gaps in play, not so much seen on this chart, but definitely on the NASDAQ, when you've got all those conditions, you know clear as day, no question asked, that this market is peaking. A big major top is in play, all right? At the same time, when you look at the volume and you see that smart money is dumping stock, is shorting stock, then you know again, wait a minute, they're seeing a big move to the downside here where they can acquire at a much better price. So I would not attempt to play this from the long side to try to get a little bump to the upside. What in fact I think that's equal to if you knew there was a bomb in your building and you run out, you're afraid of the bomb, and then you think, oh man, I left a snack cake on my desk. That's the equivalent of trying to buy here for a little bump to the upside. You may get the snack cake, but you may also walk yourself right into a situation that's going to collapse substantially. So I would be very cautious this market. I would not be long the market in any move to the upside. I short. Okay, a quick look here at gold. Let me show you what's going on right here. You've got a lot of people here that are betting on this as being a safe haven against a market collapse, something like that. That would be a mistake. Short term, if you go back and look at the 2008 situation when you had a major sell-off, gold followed it lower. So don't be thinking to yourself that if I buy gold, I'm safe and protected from a sell-off. You're actually not. Short term, if you're a short-term trader, a swing trader, that kind of thing, expect to be pulled down with the rest of it. Now, if you look here at the slow stotch, the full stotch, you'll notice your high point here, all right, is higher than the previous one right here. So this would suggest that this uptrend here makes sense between this high point and this high point, higher high. That should be justified, right? Okay, remember, we use multiple indicators whenever we're analyzing charts because sometimes a particular indicator will miss something that's happening that they need to you won't catch unless you're looking at multiple indicators. So if we scroll down and look at the RSI on this same chart, both the RSI has got a high point here and a lower high here and here, showing a clearly defined downtrend, and the MACD is doing the same thing. So what you actually have is a bearish divergence. It means price activities shouldn't have actually gone up there. It's peaking, and doesn't have the momentum behind it to drive it higher. So like I said a moment ago, don't expect gold to be some kind of safe haven against a major market sell-off, not short term, okay? Here's the Hang Seng Index. Again, like we expected, that was your shooting star formation right there, that white candlestick formation there with a long wick out of the top, and then we sold off substantially today. but this formation here is just another shooting star formation. I would not be a buyer of this in any way, shape, or form. You still have this bearish divergence where price activity went higher than it should have, and momentum is going lower if you look at the RSI indicator like we showed you yesterday. Again, ultimately stay out of this market. These guys are being hit because of the Fed's activity here by devaluing the dollar. It's driving up your commodities. That's hurting them substantially. Anybody out there that's bullish because of the Fed's activity has not actually thought it out. Whenever you analyze what the Fed has actually been doing, you get to a conclusion that the only person he's attempting to help would be America, but it's not even doing that. I mean, all he's doing is putting money into the banks, but he's hurting consumers here. He's hurting profit margins for companies. He's hurting other countries. Nothing that he does can actually become bullish for the overall market. So keep that in mind. Okay, a quick look here at the London Financial Times Index for the FTSE. You've had a sell-off today and then a bounce back up, which some news came out on the Europe front there where they were talking about Ireland and this and that. They're trying to sweep under the rug again. Keep in mind that this market is going to be really news-driven, and everybody's going to be focused on the Ireland, Greece, Spain, Portugal, that kind of situation over there. That's what's bringing down everybody. It's taking they don't have time anymore to play the kick the can down the road. This is blowing up in their face now, so it's going to be driving markets lower. Just like we saw back before the last flash crash, it was Greece that brought us to our knees there. This time around, it looks like it's going to be Ireland, but regardless, it's going to bring us down. The rest of the markets will follow it. This chart here tells the story. Everything you need to know is right here on this chart. The NASDAQ started off at 2,100, just shy of it actually, and you ran it all the way up here to the highs, broke out of new highs above the previous flash crash level. That's the same level you were at before the flash crash. You did the exact same pattern running up here ahead of the news out there on Europe. You knew about back before the flash crash. You knew about back here. You knew about Greece and Spain and all that other stuff, but no one actually paid any attention to it until it started to blow up in their face. We're doing the exact same scenario. The most important case here, all the gaps. You had them before the last flash crash. We told you the same thing back then. Whenever you get all these gaps like that, tons of gaps, it will not support weight once it's put on there. So you can't build on it. So the idea that you're going to buy here because the bulls might push it up a little bit, that's really dangerous because all of this right here is going to be erased. As we said before, whenever you're analyzing the markets, whatever you do, where you find on the charts, back it up with the VIX. Looking at the U.S. markets, double check it against the VIX. The VIX runs the opposite of the overall markets. So if you're seeing very bearish signs in the overall markets, you should find very bullish signs in the VIX. And that's what we talked about 1, 2, 3, 4 days ago with this hammer candlestick formation. Told you need to start buying right there, and that's what happened. You turned around right there and turned to the upside, and you got a nice continuation signal to the upside from here. You're coming up here off the slow starch oversold condition right there. We should be a buyer, and you'll notice low point, higher low still. Momentum to the upside is increasing while momentum to the downside is decreasing. At the same time, price activity for the entire month of September and October has been moving to the downside, which would be a lie. Basically, the sell-off here would not be true, which confirms what we've been saying all along. The advance in the overall markets is not true. It's not something that's going to last. It's going to fall apart. So all of this is going to end up doing this number. Pretty cool. Pretty awesome. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, a little announcement to make. Over the weekend, we'll be adding a lot of really cool features there at perfectstockalert.com. That's pretty cool. And that's actually thanks to you guys. Zach's got a hold of us today and asked if they could put some of their stuff on our website. And basically, we're growing to a point that people are taking notice, and we owe you all that success to you guys for sharing, our videos online, referring your friends, and so forth and so on. So thank you very much for all that support. We're going to keep working our tail off for you and providing you the best services we can possibly come by. All right, pretty cool, pretty awesome. Enjoy your weekend. Let me get on with this. A quick look at our disclaimer. The disclaimer: read it and weep. Remember, a couple of days ago I said 2 words: get out. I still hold to those words. Get out.